All right, guys, we're on another episode with Closing with Christian, and today we're going to talk about a conventional loan with my clients putting 3% down. And this right here is the conditional approval. So this is what the underwriter asked for. So we're going to go over everything just to prepare you if you're in this situation or similar, to prepare you for buying a house. So this was two buyers. It was a couple, and the purchase price was $295,000. And they were bringing 3% down because one of them was a first-time home buyer. The other one already owned a house. So unfortunately, they couldn't take advantage of any down payment assistance, which is why they came to me from another lender. Now, rather than having to put 5% down, we were able to get away with 3% because, again, one of them was a first-time home buyer. Now, their credit score was a 694. For a conventional loan, you want to have the highest credit score possible. What helped us out here is that the wife had a better credit score. You know what they say, cash is king, but credit is queen. That helps out the loan for sure. Even though the interest rate was based on the 694. Now, their debt to income ratio, their housing expense was 27.96%, which means that 27.96% of what they bring in together will go towards their house. Okay, that housing expense ratio. And 45.59% is their total expense ratio, which is their housing expense, their mortgage payment, and all their other liabilities like car payments, credit cards, and so on. Now, while we're on the topic of liabilities, let me tell you how much they had in liabilities. So total liabilities was about $2,500, but we were able to get away with two payments. What I mean by getting away with is we were able to exclude them. Now remember, one of them was not a first-time home buyer. She already owned a house, and we had to hit her with the mortgage. The great thing is, she rented that house out, so that rental payment covered her current mortgage, and her current mortgage was $1,214. She received $2,000 for the rent. She didn't get $800 as rental income, but instead it allowed us to exclude her mortgage payment. And then there was a car payment of $699. Now, she co-signed for this car for her daughter, $699. Now, what we had to do to exclude that is we had to show 12 months payments from the daughter from her own account without her mother, showing that she pays for her car by herself. That's how we were able to exclude it on a conventional loan, okay? So after those two were taken out, that's how the remaining liabilities was $1,214, making the total debt ratio 45.59. Now, their verified income was $8,623.33 a month. I'm not going to do the math right here, but I'm going to make sure to put it on the screen to show you what the annual income is. So their mortgage payment every month, their monthly mortgage obligation was $2,080.03. Now, this isn't their principal, interest, tax, and insurance, which is what we qualified them on. That was $2,411.35. Now, remember how I said monthly mortgage obligation of $2,080.03? That's because we waived escrows. You can't waive escrows on many loans, and not many lenders will allow that, but I do, okay? The lenders that I work with do. So we were able to take off their property taxes and their homeowner insurance from their payment, their monthly mortgage payment, which is, again, brought us down to $2,080. Now, they're still responsible for paying their property taxes and their homeowner insurance. They're just going to be paying that on themselves. The mortgage servicer is not going to be collecting that from them. So you still have to pay that. Now, let's go ahead and get into the nitty gritty of the loan and just what we need, okay, to fully approve this loan. Again, the purchase price was $295,000. The loan amount was $286,150. Remember, they put 3% down. So $295 minus $286,150 was their down payment, okay? And again, I'll put that on the screen here. We did need an appraisal for this, and the appraisal came back with no issues. This is something that's needed on almost every single loan, especially if you're putting the minimum down. So we did need an appraisal, and the appraisals are paid up front. The appraisal for this one was $525. It can vary where you live, what type of area it is, how big the house is, so on and so forth, okay? But this one was $525. Assets. They needed to show that they had money to cover their cash to close and their to show that they had money in the bank. So remember, you do need to have money to buy a house, okay? So you do need money. Now for them, the total assets that they needed was $23,269.23. This couple had a little over $30,000, so we were good there, okay? We also needed to verify the receipt and clearance of earnest money deposit. So an earnest money deposit is what you put down on your offer. So again, it's very common to put 1% of the purchase price. The purchase price of this one was $295,000. 1% of that is $2,950. We needed to show that that came out of their account and that the title company received it. Now, this condition here was unique, okay? So there was an address associated with one of the borrowers that showed that it could have been a foreclosure, okay? Or a short sale or deed in lieu of foreclosure. So we needed to provide documentation that it wasn't. So for her, we just showed that a quitclaim deed showing that she had no responsibility on the property, and that was it. We got this condition clear. Now remember, she already owned a home. Another unique scenario with this one is while she owned the home, she was not on the loan. She was on the title, but she was living there. So we had to show 12 months of on-time payments. And because she was not on the loan, it wasn't on the credit report. So we had to show 12 months of mortgage payments coming out of her account to clear this condition, which we did. She made the payments out of her account. Everything was verified. This next condition was to exclude that car payment of $699. Again, I just needed 12 months of payments from the daughter, the co-borrower, showing that she made all the payments. And if we don't have that, then we would have had to keep this debt in there. This next condition here is saying that the mortgage on the blank property is now reporting on the credit, document the balance and monthly payment, and provide evidence that all payments in the past 12 months were timely. This one, for this condition, we just needed to show the most recent mortgage statement. The most recent mortgage statement would have showed if they've ever been late or if they're current on there, and it shows the breakdown of their mortgage payment. So we showed that. That was fine, good to go. Their income history was a little choppy. Okay, for the last 2 years, he was self-employed, driving for Uber, Lyft, things like that. Okay, that would consider him self-employed. But recently he did get a salaried job. So what we needed for that was we needed to show a pay stub of that job showing that what they get paid. We also had an offer letter confirming that they were salaried. We also needed to get a W-2 for the recent jobs that he had in the past 2 years. And then the other client, she had a gap in employment. Let's see if it says how long the gap was here. Yep, the gap was for 8 months. Okay, so we just needed to provide a letter of explanation as to why she had this gap in employment. And in her situation, it was a family matter. She provided a letter of explanation. No documentation was needed to support her letter of explanation, and we were able to clear that. Now, remember when I told you guys that that she had the mortgage, or excuse me, that she had the other house where she was paying for that? She wasn't on the loan, but she was owner on the house, or she was on the title. Well, we had to show proof that they were going to rent that property out. So we needed a lease agreement and 2 months of rental payments. So the security deposit and first months. Very simple. You get a lease agreement. We showed the deposits, canceled checks, cleared condition. Okay, and then the last condition is, for the last condition here, guys, this is all internal stuff from the lender, so nothing from them. Let me just see here. Yeah, we needed a copy of the invoice for the homeowner's insurance policy. Remember, even though we were waiving escrows, we still need to show a fully executed homeowner's insurance policy, which is something that they shop for. And after that, guys, I mean, that was it. Towards the end of the loan, we needed a verbal verification of employment from both of their jobs, which means that the lender calls and just make sure that they're still working there, that their pay hasn't changed, their hours hasn't changed. Again, it's a verbal verification of employment. This is something that the lender does, not the loan officer. And that was it, guys. Yeah. Oh, and then for this house, again, $295,000. Their cash to close after everything with down payment, closing costs. Now they did receive a seller credit, but all they had to bring to the table, all in, was a little over $15,000. So guys, if that's you, or if you know someone that's in a similar situation, or maybe just want to see how much you qualify for, please feel free to reach out to me and I'll be more than happy to help you out. Guys, thanks for watching. Catch you on the next one.